On the last trading session of Friday, gold spot printed a closing price little above $1,726 per ounce. The numbers rounded and the market is closed. And on the last week, gold traded as low as $1,676 per ounce and as high as $1,739 per ounce. Numbers are rounded and the market is closed. Gold is in a correction and it's trading below its all daily simple moving averages. The RSI readings are bearish on the daily chart, weekly chart, and still in the positive territory on the monthly chart. The supports are seen at 1676, the low of the last week, then 1650, then 1600, and the resistance levels are 1760, then 1810, and then 1880. That's all. And move on now to the calendar. On the economic calendar for the coming week from the US, we are waiting for the retail sales and imports index on Tuesday, then Fed interest rate decision and the conference on Wednesday, and the Philly Fed manufacturing index and employment index on Thursday. That's all for the economic calendar. We'll move on now to the trading strategy. Hi everyone, I trust and I wish that all of you are doing fine. It's very nice to meet you again in our weekly video for gold and precious metals. In this video, we're going to talk about the different arguments about gold and precious metals at the moment. At the moment, the market or in the marketplace, there are three different arguments about gold, and we're going to analyze and evaluate which one of these arguments is having or is making more sense than the others. We're going to start with the bearish case scenario. As you may know, there are so many analysts out there. They do believe that gold at the moment is having a bearish case scenario, and they do expect that gold is going to decline to the pre-pandemic levels, which is somewhere between $1,300 to $1,500 per ounce. The point simply is that the economy is reopening, and people, they don't need to keep their money stuck into an idle asset like gold. Then they are going to cash their gold positions and invest it into somewhere else, which can make more profit, considering that the economy, as I said, is reopening and is hyping, and somehow there is a potential for making money by investment. The second argument is that gold already have done a 7 months length of correction since August 2020, and we made somehow a substantial low relatively to the peak that we have had at $2,070+, and gold is relatively somehow cheap, especially if you will take it to the amount of the money that have been printed and injected into the system as fiscal or monetary stimulus. So one cannot imagine that gold is going to decline after all this stimulus has been injected into the system, and the people who support this view, they do believe that gold is going to is already bottomed about 1676, and it's going to find its way back toward 2000 or somewhere between $2,000 to $3,000 per ounce. The third argument is that gold will be consolidating here in the range of 1670 to 1770 for some time. Gold is oversold and it needs time to digest the fall that it had. Moreover, markets are extremely overbought. By markets, I refer to stocks markets, crypto market indices, other commodities like crude oil. All these markets are overbought and could start a correction, which could give gold some sort of a support, as there could be some sort of a safety trade which will help gold to at least to stop declining. See the three arguments. Among those three arguments, I do believe the third one is the most realistic one. I think gold is going to stay somewhere here around 1700 to 1800 for some time. Technically, gold formed a neutral candle on the last week with a high of $1,739 per ounce and a low of $1,676 per ounce on the week. Now, if gold can break above 1739 and close the coming week above 1760, this will confirm the bullish case with a target of 2000. But on the other hand, if gold breaks below 1676 and they close the coming week below 1660, then gold is heading lower toward $1,500 or even $1,300. So I believe there's no need to rush unless you got my advice from the last week and you have already entered a long position. As I said on the last video, that gold should find some sort of a support between 1680 to 1700. If you manage to buy at these levels, you may keep your position, take some profits off the table and keep your position with a stop loss at entry level. And we will be watching for the coming week. If gold did the bullish scenario, I mean, if it breaks above 1739, then if it closes the coming week above 1760, you are mostly better to keep your position open than you keep your stop loss always on the green. However, this is for our video for this week. Thank you guys for watching. Please share, like, and subscribe, and see you in the next week in another video.